Yes, market have grown increasingly confident that slowdown in inflation will allow the Federal Reserve to end the aggressive interest rate that had caused the S&P 500 to drop worst level since 2008. As you can see clearly, S&P 500 has gone 5% since the beginning of this year. But at the same time, those higher interest rate could drive the economy into recession and slam the brakes on any growth. So therefore, as an investor like you, positioning for your financial can be tricky in this situation and it can be stressful at times. So invest, you are not alone. Investors around the globe are now struggling to understand when to drive back into the stock market. In this video, I'm going to explain how you can invest in this tricky situation by providing you my 3 top picks. I will do my fundamental technical analysis and unveil my 3 topics. So stay tuned till the end of this video. Okay, let's roll into our topics. The first topic is United Health Group, ticker symbol UNH. This company is the largest managed care insurer in the world. Through its United Healthcare segment, this company offers healthcare insurance products which accounts for almost 50 million customers around the globe. You can imagine how big of a customer base they have it. In another segment, which is health technology analytical segment, which is called Optum, they serve government, healthcare providers, employers, and in this segment, they account for more than 149 million customers, and it's keep growing every year. Hey, you might be asking me, is there a moat to this business? Moat means like what is the key selling point for this business, right? So you can clearly see in this graph, which shows the total US population and the percentage of growth of various diseases from 2013, and it's projected all the way to 2025 for various diseases such as stroke, heart attack, cardiovascular diseases, diabetes, hypertension, arthritis, and asthma, right? And you can see clearly the trend is going to be in an increasing way. So that means as long as the humanity exists in this world, there will be a healthcare needs for them. So, and also keep in mind, when the global population ages, they require more care, and I think the company like United Health will only become necessary. Okay, now let's look into some of the fundamental and technical analysis. First off, I want to let you guys know why I picked UNH is not only because it has a good moat, but as you can clearly see from this graph, for the last 10 years, UNH has been beating S&P 500 like no other stock. The stock has been up 784% compared to S&P 500, which is only up 187%. Okay, the next thing, it has an excellent top and bottom line growth. So you can see in this chart, this is an income statement from UNH. This is a quarterly statement and quarterly graph that shows for each quarter the revenue has been growing nicely, as you can see clearly, and then income is also it's not decreasing, but at least it's growing at a nice pace, right? Revenue is obviously increasing in a much larger pace compared to the income, but the point is they have excellent top and bottom line growth. Now let's get into their balance sheet. So you want a balance sheet where the asset is like at least 3 to 4 times than their liabilities, which you can see clearly in both their quarterly as well as annual statement. So excellent balance sheet again. Now coming to the cash flow, which is a good indicator for how well they can use those cash and put into their operation. I would say the cash flow is okayish. I'm not very thrilled, but it's not really in a bad situation. So you can see clearly in this quarterly chart, like in March 2022, they had positive net change in cash, but it went down in June 2022, and then it came back up, and then it went back down in December 2022, which is a concern. But when I look into their annual cash flows chart here, since 2018, the cash flow has been in a decent shape. So that's why I gave okay for the cash flow. So overall, fundamentally, this stock is really good. They have good top and bottom line growth. They have good balance sheet. The cash flow is okay. Okay. Now let's go to the technical analysis. So this is like a 3 years United Health Group chart. And as you can see, the chart it is clearly in an uptrend. And then, but only like recently it started breaking down since the fourth quarter result. But nevertheless, I wouldn't be worried so much, because it has to break this neckline, which is around like 480-ish, or even below that, maybe 470-ish. This is a rough sketch though. So you can clearly see it's in sideways trend for now. As long as if it doesn't break this line, I wouldn't be worried. And in terms of entry position, I would like right now, as of the time of recording, it was trading around like 490-ish. So anywhere between plus or minus $7 range, you could take a position. Okay, my next topic is ticker symbol MOS. The company name is Mosaic. The Mosaic company is based out of Tampa, Florida, and they mine actually phosphate, potash, and collect urea for fertilizer. So there you go. That's the mode, guys. So as long as the human is going to consume food, all these crops need fertilizer. Okay, so now this is a chart that shows how MOS is consistently beating S&P 500 for last 3 years, guys. That's a big thing. You can see clearly this is a 3 years chart that shows how MOS is consistently outperforming S&P 500 for last 3 years. Now you can see the bottom yellow one is the S&P 500, which is up 8.9% for last 3 years, compared to MOS, which is up 124.13%. That's a great thing for a stock to achieve. So next thing so they have an excellent top and bottom line growth. As you can see clearly in the quarterly chart, the revenue is increasing, and as a nice uptick, and then followed by the income, which is also consistently growing, which is also evident in their annual statement as well. As you can see, from 2017 to all the way to 2021, it's been increasing nicely. The income is also kind of in a good shape. So overall, they have an excellent top and bottom line growth. You can see they have an excellent balance sheet. You want to see the asset is at least like twice than liabilities, which you can see both in their quarterly and annual chart there, where they are consistently have grown their assets and have kept the liabilities around the same ballpark rate. And then finally, I want to talk about the cash flow. Even though this is not an impressive chart, but then you can see this is the quarterly chart that shows September 2021 they had net change of minus 578 million, but in September 2022 it is decreasing. So but if you look at last 4 quarters, like December 2021 to 2022, it's kind of like, in a decent range. It has improved much better than compared to September 2021. So same thing with your annual statement. You can see since 2017 they have been consistently trying to improve, which you can see clearly there. It's been like now almost for last 3 quarters they're kind of in the positive range. That's what you want to see as an investor, and that's why I'm saying this company is trying to improve their cash flow position. Okay, so now I want to understand much better what is the vision for this company to utilize these cash flow, right? So for that I want to look into their latest Q3 presentation, where they have outlined their vision for free cash flow, where you can see they have three key things that they want to do with their free cash flow. The first is they want to strengthen their balance sheet by reducing their long-term debt. That's exactly what you want to see as a shareholder. And then second thing is they want to invest in their business, which is another good thing because they want the company to grow, so which is another good thing. And then finally they want to return to the shareholder. So Mosaic is a good company which yields around like 1.543% in a dividend. As you can see, they are saying they want to have the regular dividend target of at least 60 cents per share, which is a good sign. And they are also considering a special dividend. So as you buy and wait in this stock, it is good to see all these dividends. So overall, I see that the company is in a good situation. They have a good vision for capital allocation, which is exactly what you want to know from them in terms of what they want to do on the free cash. Finally, I want to talk about the technical analysis. So this is a 3-year Mosaic daily chart. As you can see, since the early part of 2022, the stock is in uptrend. But like since later part of 2022, it came down, but then it didn't break that neckline that you see, $42. Is basically it's kind of consolidating thereon. So and it's kind of going up a little bit now. It's kind of range bound between $42 and $55. So if I have to buy, I would buy anywhere between this this range, and you should be doing good because you have a good dividend, and as I said, it has a good moat. Therefore, I would strongly suggest you to buy and hold this company. Okay, my final topic is CP Rail. Ticker symbol is CPR. So this is the graph that shows CP Rail network coverage. As you can see, they clearly have they have ports. They can connect the ports in the west and east coast. As you can see, in west coast they have Vancouver. In east coast they have access to Montreal and New York, so on. And then they are pretty much a transcontinental railway operator. They go all the way from Vancouver to Montreal in the east, and they also cover some portions of US. Two major rail operator in Canada. One is CN and one is CP. So there is no other competition. That's number one. The second thing is they already have built up like so much big network that if somebody has to come and compete with them, it's going to be next to impossible, right? And then they have that excellent coverage in terms of supply chain logistics, so which would be a good thing for for when it comes to transportation. They have that moat, right? Why did I pick CP Rail. So this is a chart showing the performance of CP Rail compared to not only S&P 500 but also to other railroad operators such as CN Rail, Union Pacific, CSX. These are the big ones. As you can clearly see in this chart, CP Rail has been performing like for past 5 years. It's not only beating the S&P 500, which is the purple one, right? You can see clearly it is beating this. The blue line is the CP Rail, which is clearly beating the S&P 500, but it is also beating the rest of the railroad operators. So that's why I'm picking CP Rail, right? Now coming back to their fundamental analysis, you can see clearly they have excellent top and bottom line growth. This is a quarterly chart showing how the revenue have increased steadily over past 5 quarters, and same with their net income, right? And this is the annual growth. Like if you can see, the revenue has been increasing steadily since 2017 on, and so has the income, right? So basically they have excellent top and bottom line growth. They have excellent balance sheet. As I said, like, you need to have assets that can cover the liabilities, which you can clearly see in September 2021. It was kind of very close, but then since then they have increased their assets very nicely, and it can easily cover their service their liabilities, which is even more evident in their annual balance sheet. You can see that in 2021 they have assets which is worth more than almost 70 billion, whereas their liabilities is around, like, I would say close to 35ish. So basically they can easily service their debt. Finally, I want to talk about technical analysis of CP Rail. This is a chart that shows 5 years performance of CP Rail. As you can see clearly, since 2020, the chart is in uptrend, and it's been like since later part of 2021, it's in the consolidated pattern, and it's kind of range bound between $64 and $82. So given the mod the company has, good coverage in terms of network, they are the only two, they are the biggest performer compared to any other railroad operator. I believe this company is going to do even better, and they don't have a lot of dividends, but they have like almost like 1% dividend. I feel that has an opportunity to increase as well. So I would suggest to buy this stock, whenever it comes down a bit, like somewhere around like 70ish would be a good entry point. And I feel like and then you can forget it, because as you can see, for last 5 years it's been beating not only S&P 500 but also all the other railroad stocks. So that's my topic, guys. I hope you like my video. If you like my videos like this, please subscribe to my channel and hit that like button and comment for what you feel. Thanks a lot for watching.